Namaskar, ladies and gentlemen. I am Bimal
Namaskar.
Baklu, former chairman, managing director of TCIL, and a board director of Public Police NGO. I welcome you all to today's event. We at Public Police NGO have been holding webinar series on topics of immediate concern. Namaskar, ladies and gentlemen. I am Bimal
Namaskar.
Baklu, former chairman, managing director of TCIL, and a board director of Public Police NGO. I welcome you all to today's event. We at Public Police NGO have been holding webinar series on topics of immediate concern to the general public for quite some time. In the past, we have had webinars on topics like how safe and secure are our bank deposits? Is it feasible to have CCTV systems in the police stations? Effective implementation of human rights in India? Role of telemedicine in mitigating the health challenges. This was during COVID period. Are the under trials in India getting true justice? Handling the challenges posed by misleading advertisements. We had a series of them, including on discounts on medicines, generic medicines, which is a dream project of the Prime Minister, Uniform Civil Code, reinstating women's empowerment through strong values, navigating the golden years, senior citizens, social security, challenges and solutions. We had three webinars on that, reinstating women's empowerment through strong values, from Indian Penal Code to Bharat Nyaya Samhita, evaluating the revamp of Indian criminal justice system, bridging the gap, community policing for a safer society, India's real estate odyssey, navigating the twists and turns of property transactions. All these webinars have been uploaded on our Public Police NGO channel on the YouTube. Today, the subject of our discussion in the series is Safe and Sound, exploring bank deposit security in India. It is a sequel to our webinar 3 years back on how safe and secure are our deposits in the banks. The safety of bank deposits in India remains a concern, as deposit insurance coverage is limited to 5 lakhs per depositor as per the bank under the Deposit Insurance and Credit Guarantee Corporation scheme. While this coverage provides some reassurance, it is inadequate for individuals with higher savings, especially for senior citizens, with these FDs being the sole source of income after retirement. This issue is exacerbated by sporadic bank failures such as those of PMC Bank and Yes Bank, which shook public confidence in the banking system. Challenges the challenges include the concentration of deposits in a large few banks. Now, during our first webinar on the same subject, some of our distinguished panelists who are from the banking sector explained in detail as to why it's not possible to have a full coverage for full deposits. So we tried to know what is the status of security deposits in other countries. Since India aspires to be a developed country by 2047, it makes sense to have a look at the status in developed world. Well, all deposits, are they really fully covered? Well, in most of the developed countries, bank deposits are insured, but they are not typically fully covered. Instead, there are limits set on deposit insurance, reflecting the need to strike a balance between depositor protection and risk of the banks. In the United States, it's limited to $250,000 per depositor per bank per ownership category. And of course, this limit was increased after the 2008 financial crisis for providing greater protection. In European Union, it's about 100,000 euros per depositor per bank, and UK, it is 85,000 pounds per individual per bank, or 170,000 pounds for joint accounts. And similarly, in Japan, it's about 10 million euro per depositor. So we realize that most developed countries cap deposit insurance at levels deemed sufficient for majority of the individuals, but insufficient for large depositors. During systemic crisis, the government sometimes steep up to guarantee all deposits temporarily, as happened during 2008 financial crisis in US and Europe. So the developed countries are quite liberal with security deposits, but no country provides full coverage. However, the banks in developed countries operate under strict regulatory and supervisory frameworks, reducing the likelihood of failures. So, where are the challenges in India then? Huge population prevents us from providing very high per capita insurance coverage on deposits, and strengthening regulatory oversight and ensuring timely intervention in troubled banks, of course, are important. And these measures combined with policy reforms can build more resilient banking system and foster trust among depositors. Today, in order to get enlightened on this subject in detail, we are privileged to have our panelists, of course, our chairman who normally starts all these webinars. He's busy with some other event right now and he's not able to participate for his opening remarks. But we have distinguished panelists. We have Professor Bijon Mishra, is international consumer policy expert, who's a popular face on the media and needs no introduction. We have Sri R.M. Malla, former chairman and managing director of IDBI Bank, and Sri Suresh Kumar Jain, executive director, Union Bank of India, and Sri Vaibhav Kale, deputy general manager, Bank of Maharashtra. To make the webinar more interactive, I would request the participants to pose their questions in the chat box so that they find their answers during the course of this webinar. So we come to the panelists. So we'll start with the consumers first. So I'll request Professor Bijon Mishra to give the perspective from the consumer's point of view.
Thank you. Thank you very much. Thank you very much, Vimalji. I hope I'm audible. Namaskar to all my panel members and namaskar to all the participants who have joined today. I'm very much keen to learn from the eminent speakers who are going to speak. I feel privileged to have been invited to share my perspective. Well, let me tell you, as a consumer activist from the year 1980, the first success story of ours was the enactment of the Consumer Protection Act in 1986, which we were happy to have enacted, which brought the legal face of the consumer in the country and recognized that the consumers have 6 rights and they also have the right for compensation for any kind of unfair trade or any kind of a substandard product, supplied to them or deficient service given to them. Having said that, I got involved with the banking sector consumers when PMC Bank went under liquidation and the Reserve Bank of India gave directive that this bank should stop giving any money, lending money or taking money from the depositors. And all of a sudden overnight, the depositors were found, at a lurch in the dark, what to do, how to get their money, which they have deposited in the bank out of hard-earned money, the scarce money, and they were told that they would be given only 50,000 rupees immediately to take care of their contingencies, but they will not be able to be allowed to take their deposit, which is there in the bank. That raised a question within me. And I said to myself that I go to a bank expecting the bank to be the custodian of my money, and I put all my hard-earned money into the bank, and tomorrow the bank says, or the bank is being told by the regulator, which is the RBI, as you know, as per law, Reserve Bank of India is the regulator for the banking industry in our country. And the Reserve Bank tells the bank that you can't lend any money, or you can not pass on any of the deposits, you can't liquidate the money all of a sudden to the depositors. So I did some small study and I saw that all over the world, there are mechanisms which protects the depositors in terms of getting insured, in terms of guaranteeing that their money is guaranteed, which is deposited in the bank. And then I observed that in our country, at that point of time, the law was that up to 1 lakh is insured and guaranteed to the depositor. So when I consulted my legal team and I sent a notice to the government saying this is not fair, that all of a sudden you put the depositors into a lurch and you put them into difficulties and you come out with such directions where you should have anticipated that this bank is not doing well. So you should have warned the depositors well in advance so they could have withdrawn their money well on time. And how do you expect them to take care of their needs and essentials? So there was, as usual, no response from the Reserve Bank of India nor the Finance Ministry. So I had to go before the Honorable High Court of Delhi. And when I went before the High Court of Delhi, what I saw was that very promptly, after reviewing, the Finance Ministry came out with a directive and told the citizens that, okay, we are now increasing this cover from 1 lakh to 5 lakhs. So it was done at the behest of us when we approached the government and told them that all over the world there are schemes where America is the highest, which covers up to about 76% of the depositors' money. And we have been taking care of only 1 lakh right from the time the Deposit Insurance and Credit Guarantee Corporation came into existence, which is known as DICGC. And then, as you know, that when the bank is insuring you, the premium they're paying out of the service charge, which they're collecting from us. Because as you know, the banking industry moves out of giving an interest to the depositors, lending that deposit to the people who take the loan, and charge a higher rate of interest to take care of their administrative costs and incidences like this kind of happenings like bankruptcy and others. So the banking industry is very clear in terms of transparency. So what I observed was, even though we have a regulator, we don't find as depositors things are very transparent and accountable. That's the first issue which I want to tell you. The second issue, what I realized was that when I deposit the money, nobody, not a single bank tells us how safe is my money and what are those schemes which are there, which is protecting the money when I'm depositing the money. They give me tall dreams that my money is safe, I will get this interest, that interest, these kind of schemes, that kind of schemes, but they never tell us at the time of getting the form signed that how is my money safe or it is being kept safe by the regulator, which is one of the biggest lacuna which I'm still trying to figure out and fight it out at the through the judicial system, because as law-abiding citizens, we'll have to take the law into confidence to move forward. So what I have always been trying to tell, and this is a great opportunity to deliberate, that I am paying the insurance cover. So when I am depositing the money, why don't you tell me how much of insurance cover I should take, rather than you deciding about me how much of insurance cover you want to give me? That's the first thing. The second issue is that as a regulator, you have a moral responsibility on the depositors. Why all the depositors? Also on the people who are doing business and taking loan from you, to ensure that the banking industry moves in a transparent, in an ethical, and in a very efficient manner. And you as a regulator, you should be responsible to ensure that you have an oversight in a regular manner, which I feel they already have, to ensure that if anything is going wrong, there should be an alarm raised right at the beginning, right, rather than coming to a situation when it is a distress kind of a situation. So I felt that this whole PMC episode which happened, it was completely a negligence of the regulator. The regulator failed to regulate the bank in a manner so that the depositors and the beneficiaries of the bank do not get compromised and jeopardize them in terms of their deposit. And what has happened now is the government has gone ahead and sold that bank to another entrepreneur, and that entrepreneur is trying to ensure that they return the depositors the money in a manner which the government has decided or the regulator has decided, one-to-one with the entrepreneur who has taken over the bank, rather than taking the depositors and the beneficiaries of the bank into confidence, which is again a wrong kind of a direction, in my view, which shouldn't have happened. It should have happened under a very kind of an open conversation, and if need be, it should have been discussed in the parliament. It should have been discussed within the elected representatives, and the law should have been made in such a manner, or the amendment to the law should have been made in such a manner that in future such incidents do not occur and the citizens are not compromised. So friends, I would like to close here because I'm more interested to have questions from friends who are participating here. I would like to close by summing up that the regulator is the main character or the main actor in the banking industry, which is Reserve Bank of India. And Reserve Bank of India has to be transparent, open, and accountable. And we have to make sure that when we make any deposits or we take any loan, because as far as I know, my entrepreneur friends, when they take loan from the bank, all their loans are insured and covered. And still we find the banks are running into, NPAs, non-performing assets. They're not able to recover money. And we do not understand how such inefficiencies come into the banking sector in our country. Now, of course, it happens all over the world. But all over the world, the citizens or the depositors or the beneficiaries don't suffer. The government comes in to bail out in some manner or the other, but not from the taxpayers' money. They have to liquidate urgently and promptly the assets created by the defaulters so that they can sell those assets and repay and ensure that we have a very transparent, credible system in the country and people start believing what they are able to being promised as per law. So I would like to close here, and I would like to open it and like to hear to the other panelists. And of course, I'm open to questions.
Thank you, sir. Thank you, Mr. Saab. I mean, you have sort of given our perspective. We are also consumers. So as depositors, we understand, I mean, your sentiment and share it. Now, as I mentioned in the beginning, there are some challenges from the bank perspective also. So we have a veteran banker here, Mr. Malla. So I'll request Shri R.M. Malla to give his opening remarks first.
Thank you very much, Mr. Vaklu. It's a pleasure to be there and grateful to you for your global research and telling all that throughout the world, no country ensures 100% deposit. Let me go to the history. I mean, Deposit Insurance Credit Guarantee Corporation was started many years back when the banks were failing regularly. And the initial deposit guarantee was 1,000 rupees. So gradually it was increased. And as Mishra Saab said, today it is 5 lakh. And if it is his efforts, grateful to him. Now, the perspective is something like this, that we have today deposits, my current bankers will correct me if I am slightly wrong, more than 200 lakh crore. At the time of nationalization of 14 banks in 69, the total bank deposits, including the banks which were nationalized, was only 4,500 crore. So there has been a huge growth. Now, there is a system that each bank, whatever deposit it has to pay 10 paisa per 100 rupees. So there is a corporation which Mishra ji also mentioned, Deposit Insurance Credit Guarantee Corporation. It collects something like 20,000 crore from banks, and it has its own corpus, which has now increased to something like 1,70,000 crore of government securities. So it earns about 11,000, 12,000 crore by way of interest. So its annual income is about 33,000 crore. And how much it pays to the failing banks is something, last year it was close to 700 crore. So a huge earning organization, which is 100% owned by Reserve Bank of India. In turn, Reserve Bank of India is owned by Government of India. Now, coming to the coverage. Now, you see, as far as individuals are concerned, roughly 98.5% of the individuals are covered by 5 lakh. So the government is very clear. They say we have almost covered 100%. But if you see the deposit coverage, because I'm just giving you an example, if ONGC has 20,000 crore in a bank, it pays 20,000. I mean, the bank pays 10 paisa on that 20,000, which is 20 crore. And if that bank fails, ONGC will get only 5 lakh rupees. So that is the situation. Now, if we say that entire 200 lakh crore, irrespective of the fact whether a corporate owns or an individual owns, the organization which has to guarantee 200 lakh crore should have a net worth of something like 20 lakh crore. At least 10% of that. That's a norm. An insurance company, in order to be solvent, has to have 10% by way of equity. Whereas our organization today has only 1,70,000 plus the initial capital which was given by Reserve Bank of India. So thinking that entire 200 lakh crore can be covered is not possible. Absolutely not possible. And what can be covered easily is all senior citizens, which you, Vaklu Saab, and our other directors of public police have been saying, which is possible. Because otherwise what is happening, as you mentioned beginning, that it is per bank. So theoretically, a person can open 5 accounts in 5 different banks, and each bank there will be 5 lakh coverage, so he can go up to 25 lakh crore, 25 lakh. But that's a problem to a senior citizen. The second is there was also a thinking, Maheshwari Saab will agree, that even currently DICGC covers public sector banks, private sector banks, and cooperative bank. Another interesting thing I'd like to tell you that right from 1969, when the banks were nationalized, not a single nationalized bank has failed. So they have not got even 1 rupee from DICGC, whereas they have been paying 10 paisa per 100 over the years. Similarly, as far as private sector banks are concerned, apart from Yes Bank episode where no one lost any money because it was quickly taken over by another consortium, there were some private sector banks which failed in past. But most of the private sector banks which were having problems got amalgamated with a larger bank. And so no private sector bank in this country has failed for almost now 10, 15 years. So what is failing is cooperative bank. Now, a very good question was raised by Mr. Mishra that it is the responsibility of Reserve Bank of India. Now, you see, as a regulator, they cannot monitor the activity of any bank on day-to-day basis. So they have to do it monitoring over a period of time once in a year. So unfortunately, what happens that by the time they do that inspection either on-site or off-site, things have already become bad. So that's why you will find Reserve Bank is a very proactive, very decent, very transparent organization. You will find such and such cooperative banks, their activities have been asked to close. And in cooperative banks also, generally, it is poor people who have their accounts, and none of them has more than 5 lakh, generally, unless, some group has somehow opened an account there. So my take on this will be, entire 200 lakh crore cannot be insured, but what can be done is 100% individuals can be insured. Because while 98 point some percent are covered, but if you see the coverage of the amount, it is only 48%. So roughly about 100 lakh is covered. So my request to Public Police NGO would be that we should try to make a case where senior citizens, irrespective of the amount, how much they are having in a bank, whether it is 10 lakh, 12 lakh, 50 lakhs, that should definitely be covered. Definitely be covered. Going forward,
बिलालो आ रहा है इधर अच्छा बता देना
ये please mute yourself.
मैं कोर्ट में हूँ भी बताता हूँ तो आप फैक्ट्री पहुंचे मैं बुला लूंगा आपको आएंगे
ये राकेश जी आप please mute yourself.
वो नहीं है कि अपना वो नहीं होगा मैं जब खुल जाए
राकेश जी का तो म्यूट ही लग रहा है
नहीं,
आप भी बोल लो कुछ
राकेश सिंह जी,
राकेश सिंह जी, राकेश सिंह जी, आप
मैंने
म्यूट
कर दिया है। अब मैंने कर दिया है। ठीक है।
म्यूट।
So my request to our group would be that we should definitely seek 100% coverage for senior citizens because they are gullible. Otherwise, what happens that as Mishra ji will also agree that there is a term called buyers should beware. So one should in fact, when there was a talk of NBFC also being covered, you see, then NBFC can lure people for paying higher rate of interest, and that's why they can create complications. So I'm sure Reserve Bank of India is not going to cover NBFCs unless we have NBFCs which become very strong and almost like a bank. As far as banks are concerned, 100% there is absolutely no problem. I said no public sector bank has failed. Private sector bank also in the last many years, nothing has failed. It gets merged. So we as individuals should prefer a public sector bank, private sector bank. But as an organization, we must try that as far as senior citizens are concerned, they should be covered 100%. And going forward, even individuals should be covered. And because the people who are putting 200 crore, 500 crore, they are supposed to be intelligent people. And they should put their money after their eyes open. Whereas we individuals don't know the analysis of any bank, but our limit should be increased to whatever money we have. I think this will be my opening remarks. Thank you, Vakil sir.
Thank you, sir. Thank you. That's a very sort of reassuring statement that yes, senior citizens and individuals can be covered. I mean, that will be a big sort of help for the consumers as such. Now, I'll request Shri Suresh Kumar Jain ji to give his views.
Thank you very much for giving me an opportunity. And thank you, Malla Saab, giving all the details, history about DICGC. And also concern of Mishra Sahib about 100% coverage of senior citizens. If I just give you certain international figures about the coverage, and before that, let me say this webinar would not have come at a more proper time than today, because recently in August 2024, there was a conference of International Association of Deposit Insurers in Jaipur, where 2-3 days serious discussions have taken place on this insurance aspect. And so many things have come out. And I am pleased to say even Deputy Governor Reserve Bank of India mooted the idea that there should be some targeted approach for 100% coverage of senior citizens. But still, as far as DICGC today is concerned, our position of coverage is still far better if we compare it with international coverage. The average coverage internationally today for eligible deposits is roughly 41%. Against that, our coverage is roughly 43%. As Malla Saab was mentioning, our coverage of number of accounts which are fully protected, that is 100% protected, that is say 98%, to be precise, it is 97.8%. Whereas international standard, it is only 80%. So these figures will tell we are still far better. And if I give you March 24 performance of DICGC, today our accessible deposits, total deposits which are covered, they are 218 lakh crore. Against that, the reserve funds with Deposit Insurance Corporation, they are only 198,000 crores. So the coverage is only 2.11%. And as Malla Saab was explaining, the main source of this coverage is the premium which is collected, And secondly, the deposits, these corpus, which is maintained in government securities, whatever profit is earned from them, so it is being done from that. And out of 218 lakh crore, the insured deposits are roughly 94 lakh crore. Understandably, there is a gap. But if you see the number of accounts, the gap is roughly 2% or so. Now, I am also fully convinced that senior citizen should be taken care of. Not only that, I myself is a senior citizen, but these people have their hard-earned money. And unfortunately, these people have put their money in cooperative banks. And if you see the failed history of the banks which have failed, then most of the people who had more than 5 lakhs of account, 5 lakh of balance, most of them were senior citizens. So their hardships can be well understood. But it was their decision. See, they were allured by the higher returns on these deposits. Similarly, they kept the fund in credit societies, cooperative credit societies, which in turn had placed their deposits with the banks. So when they failed, the situation was not good for them. For banks, these deposits, they form a more stable base, more permanent base, senior citizens. So as I mentioned that during a recent conference, Reserve Bank of India Deputy Governor himself made a strong point that senior citizens should be covered 100%. Not only that, very recently, the banks collectively have written to Reserve Bank of India that senior citizens should be covered 100%. And they have also taken up this matter with the Government of India. And also, I will take this better in two ways. Firstly, about the limit of 5 lakhs, which is there. And thanks to Mishra Saab getting the limit increased from 1 lakh to 5 lakh. Initially, it started from 1,000 to 1,500. Then in 93, it was only 1 lakh. But if you see today, the growth in value of the deposits, inflation, economic growth rate, increase in income level, there should be a periodic upward revision in this limit, which is warranted. While each aspect is at two separate aspects. While full insurance looks to be ideal for depositors, it is likely to trigger moral hazards where bankers take undue risks as they don't have to face consequences of depositors. This is the second aspect, if you see the other side of the coin is. Nevertheless, as the issue has been already flagged, some outcome will definitely come. But meanwhile, there are some safeguards which are already available to not only senior citizen, all the depositors. Like suppose I am an individual, Suresh Jain, I maintain one account, 5 lakh. And Malla Saab was saying, I can maintain in 5 different banks. Each bank will have a separate coverage. It will not be clubbed up. Clubbing will be only if it is in the same capacity and same right. Now, I can so 5 banks, you can cover 25 lakhs. In case I have joint account with my wife, additional cover of 5 lakh is available. And even in that case also, if my Suresh Jain plus my wife coverage is 5%, 5 lakh, and if my wife name is first and my name is subsequently, then additional coverage of 5%, 5 lakh is available. I have joint account with my son, my daughter-in-law, all these will have 5 lakh coverage available. If as a minor I am the guardian, separate cover is available. If I am trustee as a trust, 5 lakh cover. If I am a partner in a partnership firm, separate cover. Somebody had done a simple calculation with all these combinations. 60 to 65 lakh deposits can be insured with a single institution with all these different things. But as far as senior citizens are concerned, it may not be that simple coverage. And if you multiply 3 banks, 65 into 3 or 60 into 3, roughly your 2 crore of deposits will get 100% coverage. But DICG has its own limitations. As we mentioned, the entire corpus is from the premium which is being collected. There has been a debate. Now, presently, that premium is roughly 12 paisa per 100 rupees. So, a recent case has come up or thought has come up that whether this should be fixed premium as it is 12 paisa or it should be a risk-based premium. Because they say fixed premium is antithetical to the insurance law. That is where your risks are high, your premium should also be high. So there should be something going on. See, so many committees, if I tell Mr. Saab, so many committees were formed. If you say in 1998, Narsimham committee came. In 1999, Kapoor committee came. In again 2005, another committee on deposit insurance came. Then in 2015, another committee came. All these committees, they gave their recommendation for charging of the risk-based premium. But that had its own limitation because there are some preconditions of the International Association of Deposit Insurers. They say system should be transparent system.
Correct.
Then scoring and premium categories should be significantly differential. Ratings and ranking resulting from the system pertaining to individual banks are kept confidential. You will agree that in case we apply this yardstick and suppose we label some of the banks that they are risky banks, immediately flight of the deposit will start from these risky banks to the safer banks. Probably the death of that bank will be an early death, which has to die after 3 years or 4 years. Death will be immediate death. Secondly, we don't have that much data available with us. So that data problem is there. So there is a sort of, dilemma for both of them, for insurers as well as for the beneficiaries. Now we see we have diversity of banks, unlike other places. We have small banks like cooperative banks, regional rural banks, local area network banks, and even some of the banks, they are as small as maybe having 5 branches or 10 branches, or may not be a surprise if some bank has only 1 branch and the bank is very small. So how they can maintain this systems, data, computerization? Again, a lot of cost will be involved, which will be disproportionate to their size and all this. So thought process is already going on about it. Because of these reasons, the government could not implement this risk-based supervision. Maybe some new ideas may come. And maybe another conflict is going on, as Malla Sahab was also mentioning, that most of the failure is happening in cooperative banks. But if you see the figures, the burden of premium payment on commercial banks, it is roughly 94%. Whereas the cooperative banks, the premium payment is roughly 6% of the total premium collected. And the claims filed since 1962, that is since inception of the corporation, gross about 14,735,000 crores net claims that have been made on the corporation by cooperative banks. Whereas the public sector banks or the commercial banks, it is only 295 crores. So I think these are the certain issues. And as I mentioned, the issue of senior citizen, that is among all those also, a targeted approach towards senior citizen can be done. That is already engaging the attention of the regulators, of the banks, etc. And I think we can see a better light in the coming days, because even if suppose something happens today, it will require the nod of the parliament also, because the amount cannot be increased unless the parliament approval is there. So I think when any issue gets engaged, something definitely comes out. So I'm sure in the coming year, maybe 6 months to 1 year, some better things may come out of all this. Thank you very much.
Jain Sahab. I think it's quite reassuring to understand that already RBI also is seized of the matter, particularly about senior citizens who face a challenge normally, a more challenge in this particular case. Now,
So, sir, can I interject for only 1 second? Excellent presentation by Jain Sahab. But I don't think DICGC requires any parliament approval for changing this limit for it. Because it's a company which is under 100% owned by Reserve Bank of India. So no parliament approval.
thank you, sir.
Sir, I think to my understanding is yes. Maybe I'll recheck the facts.
Please
Right.
recheck.
Thank you, sir.
You know, parliamentarians would love to make an announcement like this, but it's an insurance company which is set up under Companies Act and not owned by government. It is owned by 100% Reserve Bank of India.
Thank you for the clarification, sir. Now I'll request Shri Vaibhav Ji, Mr. Shri Vaibhav Kale, to give his opening remarks.
Sir, thank you, and thanks a lot for inviting me amongst all such eminent speakers like Malla sir, Jain sir, Professor Mishra. So a lot of area has been covered with respect to insurance to be given to the individuals who are banking as of now. Only 2 points I would like to make. As sir has said that senior citizen definitely needs to be covered. Because as far as communications regarding banks' risk profile, the major challenge is why the things which are happening with cooperative banks are not visible or eminent to the depositors. The only thing which is required is to create awareness among the people who are depositing the money with the banks. I would segment here that the incidences are happening more with cooperative banks and lesser with scheduled commercial bank. I would not say public sector banks or private sector banks. But all these banks put together are government also or sovereign would also not like to make such banks to fail. Like in the event of Yes Bank, immediately the consortium has pitched in. So it is always about the intent of the sovereign. And the data also shows that after USA, we are the first nation to establish such a deposit insurance guarantee corporation in 1962. So intent is always there. The only factor which is limiting is, as Jain sir has said, that the availability of data, which is not there, and the communication channels which we need to open with individuals that see if you are depositing with a Nidhi company or you are depositing a money with an NBFC or a chit fund company, although they may get a better rate of interest, but the kind of risk which is associated is huge. For 2%, 3% or 0.5%, people keep on switching deposit. But what exactly is the impact on a lakh of rupees deposit they are keeping and what exactly is the amount of difference they are getting. It's minimal, it's nothing, but the kind of assurance they can get from a PSU or a scheduled commercial bank, that is immense. So if just like RBI is doing, they are creating a lot of awareness campaign in print media, social media, and everywhere. So RBI has taken this as a main strategy to communicate to the people, because as the speaker have said, we can really ensure the entire amount of deposits with the banks, but that will not solve the purpose of insurance, because the cost which is involved is huge. And then the banks may not be the profitable organization if you are keeping everything in the form of premiums. And again, the same thing Jain sir has said, that if I'm comfortable that my deposits are secure, I can lend to anyone and everywhere. One thing. Secondly, across the world also, the data, as you have, Sir Vimal sir has already shared, I would just like to add, in Africa also, South Africa, 1 lakh rand is insured. And if we can compare this data with their average wages, so the average wages in South Africa is 26,783 rand. So roughly it's a 3 times coverage, 3 to 4 times coverage a person is getting out of that insurance. But when we go to the developed countries, it's almost 15, 16 times. So our 5 lakh rupees, if we compare with our average income, is in line with the international standards. So that the data is also there, if you can derive. But my point of submission is creation of awareness among the customers and general public. That is very, very much important. And we should, as an individuals and from these kind of forums, we should try to see that the awareness actually reaches the person who is requiring that. Senior citizen, definitely with the like digital products which are getting into it. So digital products are also trying somewhere to, people are getting defrauded by online banking frauds. So these are the things which are of more concern rather than the banks failing. One point, I'm deviating from this aspect, but the history and the data shows that in our country, the banks have not failed so much as compared to other countries. And there is no protection in European countries or USA for that matter for failures. So my submission would be awareness and proper data collection by the regulator that will help to create proper risk-based models for arriving at a figure of insurance, what is obviously required.
And thank you very much. Thank you. So, I mean, broadly from this round, I understand that, basically we need to have a system of monitoring the banks effectively. I think as a technologist, I feel maybe we can provide an online system for, checking the systemic problems with the failing banks. Because Malla Saab was mentioning that RBI does once in a year inspection. If it is online, so that and we use big data analytics, maybe we'll be able to judge, yes, this bank is on the decline, and some corrective action can be taken so that there is no risk and the depositors are also taken care of. I mean, this just is a thought. Now, from because today we have spent a lot of time on this opening session, because probably we needed an elaborate sort of, you can say, response for to begin with from Professor Mishra. So everybody wanted to give the perspective from the banking perspective. So now from the consumer perspective, I think, yes, Mr. Jain has mentioned that you can have multiple accounts and that takes care. And also he mentioned that RBI is seized of the matter. So I think overall, there looks some proper light at the end of the tunnel for consumers like us. So now, Mishra Saab,
Vimalji,
what's your view now, based on all
quickly
that has been mentioned here?
quickly to respond. In fact, thanks to Mallaji, Suresh Bhai, and Vaibhav for their inputs. You see, where I really want to come in. You know, today with technology, Reserve Bank cannot get away saying that I can monitor only once in a year. No, they can monitor.
Can I correct Mishra ji 1 moment? You see, there are 2 types of surveillance which Reserve Bank does. One is, of course, online. All banks are supposed to submit their information periodically, which is 15 days, 30 days, and things like that. It's a very savvy organization. But what do you do to a bank which you named? He says that I have given 2
I'll
lakh
tell you,
loan.
I'll give you the solutions. You just
No, no,
listen to
let me
just listen to me for 2 minutes.
complete.
Let me complete and then you intervene, please. Let me
Okay.
complete. Then you intervene
Okay.
because it will disturb my flow of thought. You see, what I'm trying to say, a huge institution by Reserve Bank of India cannot get away saying that I do not have the resources to manage and monitor the banks. That is first of all, because their mandate is to manage all the banking sector which comes under the law with them. So that is the first thing. The second thing I want to say, when I heard this message saying we hardly have the data. Who is supposed to collect the data? Who is supposed to get the data? If supposing you are in the banking industry, you are duty bound to share the data. And if you fudge, then you should be punished in such a deterrent manner that you will never dare to fudge again. That's the first step. The second most important step, you see, what I always want to tell you all is that, you see, you are taking the 10 paise from me. You have no right to take the 10 paise from me without letting me know that you're taking the 10 paise from me. Why you are not telling me that fact when I am depositing the deposit in the bank? Then I also heard Suresh Bhai saying the excellent thing which he said. You see the global best practices. Make things transparent. Let the bank get rated in a transparent manner so that when I go to a bank as a depositor, then I fully well know where am I going, how risky is the terrain, and with full knowledge, I go as an informed choice. My contention is if people fly away from those banks, if you make the data public, then that is the responsibility of the bank to ensure that they bring a change that people don't fly away. Why are you protecting those culprits who are a nuisance to the society? Why do you encourage those cooperative banks to exist if they're a nuisance to the society? See, my contention is only this. Reserve Bank can talk, can discuss, can bring policies. They have been empowered by the parliament. They are governed under a law. They should use those powers diligently, efficiently, and effectively in the interest of the citizens. Don't give us tall promises, please. That is all what I have to say. Perform, perform, which is easy and doable. I've sat in many committees. I have compiled many reports. They are all being rotting in the trunk and the cupboard of the government. Why constitute a committee which you can't implement the recommendation? Why spend money on a committee if you can't implement the recommendations? That's my bottom line. That's all. Thank you.
Thank you, sir. Malla Saab.
So,
Yes.
what I mentioned was that, without sounding, Reserve Bank is one of the finest central bank in the world. Now, one must, see this. We have thousands of cooperative banks, thousands, and only limited number of them fail. As it was mentioned, last year, I think their claim was 600 crore. And Mr. Jain mentioned right from inception, they have only taken 14,000. So I'm roughly calculating maybe 4 times of that deposit would have failed. So let's say about 40,000 crore over a period of almost 60 years. So this speaks volume about Reserve Bank of India in United States of America, which is supposed to be one of the most developed economy in the world. Number of bank failures is much more as compared to India. and the credit goes to Reserve Bank of India. And of course, it goes to the bankers and the employees working in the banks, that none of the public sector bank has failed. Private sector bank, last I remember was, I think, Hindustan Commercial Bank or something, some 15 years bank which failed. After that, it is Reserve Bank's resilience that even private sector banks are encouraged to merge. Times Bank, Centurion Bank, even Yes Bank. So, what happens, that the successes no one mentions, the failure is mentioned. Now, as far as cooperative banks are concerned, I said thousands of them, only limited number fail. And the Reserve Bank has excellent way of, cooperative bank have another problem. They have dual control, state government as well as Reserve Bank of India. And unfortunately, I mean, some of the people who get attached with cooperative bank, and our friend said, because they pay slightly more rate of interest, people get attracted. Their systems are not electronic, so the data flow from them to Reserve Bank is not regular. Or, to tell you very frankly, what Mishra Saab said, that some of that is not correct. For example, the bank which failed, and he mentioned it, they had said that we have given 200,000 loans to housing, and the names were also there. And Reserve Bank can only see, okay, names are there. Ultimately, they came to know that this 200 lakh, or I don't remember the figure, was actually only names. The entire money was given to one person. And, we have to go one group. So judicial system and all that. And look at that. Even that bank has been, I don't know how Reserve Bank, though Mishra Saab says it is not transparent, but I'm not aware. Ultimately, it has been taken by a very savvy group. Hopefully, people will get money. I don't know.
Mannaji, just
Don't know the repercussion.
let me tell you.
No,
Don't put words in my mouth. I have never said Reserve Bank is
Mr.
not.
Saab, one
I have
moment.
never said Reserve Bank is not efficient. I have only said Reserve Bank needs to be more transparent. I'm working with them. I'm working with them. Let me tell you that. I also acknowledge what you are saying. They're doing a great job.
Thank you.
They're doing a great job, but they jolly well know where things needs to be tightened up. They jolly well know that.
Fair enough. There is, as you very rightly say, there is a scope of improvement everywhere. Absolutely right. And, at the end, I'll only say consumer is always right. You are so true that, now I even see on the passbook, some of the banks print that your deposits are insured up to 5 lakh rupees. So, I think in some bank branches, it is also mentioned. But I'll go by what Weber said. Reserve Bank does publicity, so are the banks also doing that. In order to make sure that your money is safe, my personal submission will be put money in public sector banks, which are very efficient, very effective. None of them has failed. Put money in private sector banks. I can assure you nothing will happen. But when it comes to cooperative bank, please be careful. And you definitely said about rating. But Mr. Jan made a very remarkable thing. When I used to work for the bank, I used to plead with the Reserve Bank that there should be risk-based pricing. And he's absolutely right. Because organizations are transparent. So if it is 1 paisa from public sector bank and 5 paisa from private sector bank, it will go. Or within private sector bank, someone is paying 5, someone is paying 6. So that problem. But let me assure you, sir, as far as credit rating of banks is concerned, most of the banks do the credit rating from either ICRA, CRISIL, or CARE because of their bonds. And which is well known to, of course, savvy people, that this bank's paper is AAA, this bank's paper is AA plus and all that. But what Reserve Bank also rates the bank. But unfortunately, that they keep secret because, and they also tell that this should not be disclosed. And the reason is very simple, sir. You know what happens? Suppose my bank has got A rating from Reserve Bank of India. I'll start telling everyone, I got A. And the one who gets B or B plus, he will keep quiet. So people will be suspicious. अरे वो तो A चिल्ला रहा है, ये चुप है, तो इसको कहीं C तो नहीं मिला, D तो नहीं मिला. But hopefully, Mishra sir, with enlightened people like you, things will improve and the country will become more transparent. Thank you, sir.
Thank
Thank you
you,
very much.
sir.
Thank you for your
Thank
kind
you.
words.
Thank you very much, sir.
Sir.
Now, since we are running short of time, I'll request the other panelists to give a 1 minute, you can say, closing remarks.
Yeah.
So we start.
Yeah, I'll start, sir. I'll
Huh.
start.
Yeah.
Sir, Mishra Sahab, I fully agree what Mr. Malla has said, that RBI, what you are saying is not transparent. I don't agree with that. They have become much more tougher in the last 5 to 6 years, if I would say. See, there have been different test checks. Already checks are there, like auditing, concurrent auditing, IT audit of the banks, etc., etc. And earlier there was no action against auditors. Now a corporation has been made for auditors also. In case any auditor does not find properly, they can be penalized for not doing their work honestly or sincerely. Secondly, as far as this 12 paisa payment is concerned, premium payment, it is not charged to the account of the customer. It is paid by the banks out of its own profit, not charged to the auditor.
No.
And
There is a difference in there. You have to anyway. There's a question on that. I may not be paying directly, but it is being paid out of the amount which is being collected from me and the loan which is being created. So it's a banking kind of a system where it is not paid out of the net profit.
sir,
It is paid out of the gross profit.
Sir, that would be a big argument. That would be
That's
a
what I'm
quite
saying. So I don't
arguable
want to
case
get into that. I
because,
don't want to get into that. I don't want to get into that. But
the
it's my money. It's my money. I know that.
basic,
But 10
basic,
paisa is my money. I know that. You can't
basic,
argue on that. It's my money.
whether, sir, that will be totally an arguable case. We
No,
don't
that's
want
my
to,
money.
but-
That's so full stop. It's
and-
my money.
But another thing which Vaibhav was also highlighted, sir, I would request if a separate seminar be done on cyber frauds, because
Yes.
it is senior citizens who are more vulnerable to this.
We have
And
seen
day
the
by
cyber.
day,
Yeah, cyber.
cyber security, cyber frauds, because it is the senior citizen which are more vulnerable to this. And here we say at least 5 lakh we get. There we don't get even 5 rupees. Entire amount gets drained
Washed
away.
out.
And a new things which have been coined, sir, this digital arrest,
Digital
where
arrest.
your money is going, your mental peace is going. Probably if a senior citizen is to live for 10 years, this type of incidents, he may live just 2-3 years only. So he will continue thinking about this only. It's a virtual mental trauma for those people.
Correct.
I think a separate seminar on this.
Yeah, actually, Jain
must be
Sahab,
done.
we'll have the next seminar on that, next webinar on that subject in December. And yes, thank you.
Very important subject. Yeah.
Yes. Acha, Vaibhavji, your closing remarks.
Thank you, sir. I think a lot of things have been discussed, sir, and the main challenges, we have got many objectives, but the implementation is the key factor. And with all these things, I would definitely say that Reserve Bank is very, very much having positive intention to addressing all these problems. And you see, sir, if you'll see, we cannot see a particular problem in present perspective. We have to see historically. Historically, we have grown. There are no banks, large banks, which have failed in our country. Not even in 2008 crisis, thanks to Reserve Bank and its policies and the kind of savings we are having. So if you see that only aspect which is required as of now is creating more and more awareness among the depositors, then where we want to keep our money and what is the kind of interest and what is the kind of security we want. So if awareness is created, half the problem would be solved. And we need to automatically, the scrupulous banks, the cooperative banks, they will get weeded out. So one thing which is most important and which the NGO is also doing is creating awareness. If awareness is created through us also, we are also creating awareness among our depositors, then don't shift deposits because of some 1% here and there you are getting. The risk associated is very high. So that would really help, sir. And apart from that, all the other measures the Reserve Bank is taking. So this is my take on it. Thank you.
Right. Thank you. Thank you very much. Actually, as a consumer and as a technologist, I feel that there are two problems that we are faced with. One, of course, there needs to be online monitoring so that the banks can be corrected at the right time. The second part, as was mentioned by probably all the panelists, was that, the cooperative banks, I feel I have also had a sort of interaction with some of them. They are controlled by these politicians and they know that they'll get away with it. And in fact, there have been challenges with large, even public sector banks, and that's why a few years back, government had to intervene, and from taxpayers' money, they had to be refinanced in a big way. So those problems are all maybe political. We also hope that in the coming years that also would be taken care of, and with the proper online monitoring and with the big data analytics, we should be able to solve this problem. And of course, internationally also, all deposits are not 100% insured anywhere in the world. So I think we'll have to live with it. Maybe the amount can be increased further based on the amount of risk involved and all that. So that's my understanding as a consumer, I would say. Now, we unfortunately, we have exceeded the time. So on behalf of, we'll have to close this session on behalf of Public Police NGO. We shall send our recommendations to Government of India because we have a lot of stakeholders who matter and they have some say in the government also. So we'll work on that. And I would like to thank all the panelists today, Professor Bijon Mishra, Shri R.M. Malla, Shri Suresh Kumar Jain, and Shri Vaibhav Kale for their contributions, and in the process adding value to this webinar. And next month, as I just mentioned, we could have on the cyber frauds and cyber crimes, the challenges posed by that, which also is a serious matter for the consumer. We'll maybe have webinar on that. So I would like to thank the organizer, Shri R.K. Maheshwari, CEO of Public Police NGO, for initiating and coordinating this webinar series. I'll request him for his closing remarks.
Thanks, Mr. Baklu and Mr. Mishra, Mr. Malla, Mr. Suresh Jain, and Mr. Vaibhav Kale to join this important webinar organized by Sri Baklu. And this is a very important chapter because money has a very important role in this world. And it is a very good news that the government is also thinking about the securing the deposits of the senior citizens. So we think that we should write to the government, our recommendation also, but this should be processed more fastly because it needed, the time is needed. So we should write to the government. And thanks to all. Thank you.
Thank you. Thank you very much.
Very much.
Thank you, sir.
So we'll
Thank you,
meet,
sir.
Yeah, thank you very much.
Thank you, sir. Thank you.
Thank you. Thank you.
I
Thank you
only
very much.
have one word to say. I'm Professor R.K. Verma, also the Secretary of the Public Police. Both government, both banks and the RBI is ready to protect senior citizens. Who is not letting it to happen? So we should then write to them or talk to them, go to them and take up the matter.
Yes.
So what is the suggestion on this point?
Yeah, we'll, as public police NGO, will certainly sort of write to the government also and engage with the government on this particular subject, as you rightly said.
Sir,
Verma
Verma sir, it is not the
Verma,
question at present of being ready or not ready. At least a step has been made. What we
Yes.
understand is the bank have taken up the matter with the Reserve Bank of India, and as I mentioned, they will have their own pros and cons of this story. That is how this can be funded also. Presently, the funding is from the premium amounts only. In case 100% coverage there, we would require a large chunk of funds also. How they are to be managed. The problem may not be that simple. But as I said, once something has started, it has already come to the notice of the regulators. Banks follow it. Ultimately, we will reach some conclusion and the situation would be better than what it is today.
Thank you, Jayanta. But
Thank you,
Mr.
sir.
Verma,
Thank you.
Mr. Verma's suggestion, I'll take a couple of minutes. Mr.
Yeah, yeah.
Verma's suggestion was brilliant. You see, they may be talking, but banks are also happy, Reserve Bank also is happy, government is also happy. So, but that doesn't make senior citizens happy. So my request is what Vaklu Saab said and Maheshwari Saab said, we should send a strong letter to Government of India that we have already covered 98% of citizens, individuals. So by just increasing 2% more, the total deposit they'll be having will be another, let's say, 10 lakh crore out of 200 lakh crore. So we should write to IBA also, Indian Bank Association, and we can request our chairman to sign that letter, that please let us know the figure of senior citizens which are left untapped. So please them. It will be hardly 2, 3, 4 lakh crore, and it will not matter. As far as monies are at the cost of repetition, DICGC is the richest organization in India. And their annual income is, I'll request Maheshwari to go to their balance sheet, 34,000 crore revenue and 700 crore payment.
Yeah.
Their profit is more than 25,000 crore. They pay to of India something like 10,000 crore of tax. It's a milking cow for them. And so that's a very
Balaji, since the time is very less, is it possible for you to put up a small idea
nowadays,
like this,
yeah,
and
I'll
we can
request,
take it up?
yeah, I'll request Mr. Maheshwari, because right now I'm engaged in something which is slightly of serious nature, and since this was a topic of my interest, but still I'll try, Verma Sahab, as you order. I'll try.
We'll be grateful. We'll be
Okay,
grateful.
thank you, sir.
Thank
Thank
you.
you.
Thank you, sir. I mean,
you.
we'll take everybody's help in framing this letter to the Government of India and
Thank you.
maybe RBI also, and let's work on this. Thank you very much. It has
you.
been a very interesting webinar.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you.
Thank you very
Thank
much.
you.
Good
very much.
night
Thank
and
you.
good evening.
Thank you. Good evening.
Thank you, sir.